Hey everybody, we're back with a housing market update. Some people are calling this a real estate crash. Is it a crash? Is it just a correction? Or is it just a slowdown on the way to higher home prices? Well, we see what's happening with rents. In our previous report, we told you about the eviction tsunami that's headed our way. A big part of high rents is high home prices, right? When homes cost more and everything else costs more, rents are going to cost more. And people are looking for some relief. They're looking for a real estate crash. Many people are hoping and praying for a real estate crash. I hope a real estate crash happens. But let's take a look at the numbers today. Let's not get too excited. Let's look at these numbers in a rational way. We're going to look at a lot of charts here. We're going to look at inventory, prices, the cities that are seeing the biggest price cuts, and a lot more. Let's go ahead and get started now. All right, so let's look at the mortgage rate. A higher mortgage rate is good, is what you want if you're looking for a housing market crash or a real estate price correction. And we do see that after the 6% mortgage rate that we saw just a couple months ago, we had a dip down to the low 5%. Now we're back up to between 5.5% and approaching 6%. And this is a good thing. We see what's happening with the 10-year yield. Let's go ahead and take a look at that. And what do we see? The 10-year yield back up over 3%. Let's go out to a 1-year chart. And we see that we saw the surge above, way above 3%, about 3.29. And then the dip, mortgage rates were actually dropping for a while. Now we're back up approaching the highs that we saw just a couple months ago. And we know that mortgage rates follows this 10-year treasury yield, this bond yield. And remember, this is all controlled. So we actually have to thank the Fed. I know this sounds strange. I've been critical of the Fed, but we have to thank the Fed. The Fed is doing a favor right now to those that want to see lower home prices, to those that want to see a price correction. Imagine if the Fed simply refused to raise interest rates. Now, many people say that they're forced to because of inflation and that so many people would blame them if inflation ran out of control and they didn't do anything. So either one, it's out of necessity, or two, they're just trying to save a little face, or both. But either way, we have to appreciate that the Fed is actually allowing a little bit of a price correction. I'm hoping they allow the market to completely collapse. All they would have to do is stop buying bonds and get rid of all the assets on their balance sheet. If they did that, then you would truly see a housing market collapse. Remember, in 2008, the reason the market crashed or collapsed is because banks nearly stopped lending. They nearly completely stopped lending for a period because there was a panic. The banks did not know at the very beginning of the financial crisis, the banks did not know that they were going to get bailed out. They did not know that they were considered too big to fail, so lending nearly completely froze. Banks stopped lending. Of course, we saw what happened with the bailouts, the TARP, all those programs that came in, the rescue programs. Banks were saved, of course, and the lending resumed, and here we are today, back to a much bigger housing bubble than we saw back then, even more insane now than it was back then. And will the powers that be let the market correct? Well, let's take a look at some other charts and some evidence, and that's going to tell us what's happening and give us an indicator on what we may expect in the coming months here. But yes, again, good news, 10-year bond yield rising, mortgage rates follow the yield, and we're going to see what happens. Hopefully, we'll continue to see higher rates. I would much rather have a higher rate and a lower priced home versus a high-priced home at a low interest rate. When you can pay off the principal, that is the key to success in housing. And it's much easier with a lower home price to pay off that principal much faster. You make maybe a few $100s extra on your monthly payment, and that's going to get that principal paid off much more quickly. Next, this is beautiful, folks. Just updated here about a week ago, the inventory of new homes. We look to the far right here, and it surged once again. Let's go into a 1-year chart here. We see the rise from June
to July, 10.9 months, nearly 11 months supply of new homes on the market. Now that means at the current sales pace, it would take 11 months to completely get rid of all the homes. That is a lot of months, because if you look at the low, going back to the lowest, which was the summer of 2020 with the onset of the health crisis, and we see it was down to 3.3 months of homes on the market. That was the low, and of course now we're at about 11, so almost a quadrupling of the number of homes on the market when you look at how long it's going to take to sell these homes at the current pace of sales. If we want to zoom out more, let's take a look here at where we're at compared to the financial crisis. We have to go back here to about April. So the early part of 2009, that's where we're at now. All right, so in 2008, at the beginning of 2009, we saw the huge spike in inventory, which signaled the peak of the housing bust. And then we saw the recovery where inventory declined and the rescue package came out, of course, and the bank rescue and all the things that went along with it. And what's called now is the economic recovery, which was a lot of money printing, a lot of QE, a lot of rescuing the markets with massive amounts of money printing and money creation. Oh, and of course, lowering interest rates and lowering mortgage rates to the floor. So how much higher will we see this inventory rise of new homes? Will we go beyond the peak of the previous housing bubble? The January 2009, it was 12.2 months on the market of supply on the market. We're now at 10.9, so we're just under 11, and we just have one more month of inventory increase to rise to meet that previous high of inventory of new homes. And even over in the UK, they're talking about the housing market correction, the crash. Daily Mail is asking, is America on the verge of a house price collapse? Prices could crash by up to 20%, and homes are overvalued by as much as 72%. Well, is 20%, would a 20% correction be a crash to you? To me, it would not be, especially when we've seen over the past few years home prices going up in some markets 100%, meaning that prices doubled, up 200%, meaning that prices tripled in some markets. So to me, a 20% correction would not be a crash, but some people are calling it a crash. Call it what you will. Let's go ahead and take a look at some of the data here. Next, let's talk about some of the most overvalued cities. This is the home price compared to incomes in these cities. We see the highest, the most overvalued, Boise, Idaho, folks. We talked about this at the end of 2021, that Boise was going to be the first one to fall, and we are seeing home prices fall. Drastic price cuts in Boise, Idaho. Next, we see Charlotte, North Carolina, followed by Austin, Texas, Flagstaff, Arizona, Nashville, Tennessee, Miami, Fort Lauderdale, Florida, as the top 6 most overvalued cities in the U.S. Next, the top 10 cities with price reductions. We see Boise, Idaho, with nearly 70% of listings price reductions. Denver, Colorado, almost 60% of listings seeing price reductions. Salt Lake City, Utah, over 50%. Tacoma, Washington, Tampa, Florida, Sacramento, California, Indianapolis, Indiana, and Phoenix, Arizona, all at 50% or more of listings with price cuts. Also San Diego, just under 50%, and Portland, Oregon, just under 50%. These are going to be the markets to keep an eye on. And we did see a pullback in home prices over the past 2 months here in California. We see the median home price coming down now nationally. Not enough yet to be a crash, but this could be the beginning of something very big, whether you want to call it a crash or not. We just have to hope the powers that be let things continue to unwind as they currently are. And good news again, this past week, the Fed came out. They said they are determined to fight inflation. They said they are determined to fight inflation, and there's no signs of lowering interest rates. In fact, they're talking about more rate hikes. And let's hope they continue on this path if you truly want to see a housing market correction. Remember, this is all manipulated. This can all be reversed at any moment. So let's hope they do the right thing and continue on this current path. Now, let's look at this from a broad view and just look at the 4 major regions of the U.S. and which region or regions had the biggest price run-ups, and that will tell us likely where the biggest corrections are going to be. Is it going to be the South, where we see year over year, July to July, July 21 through July 22, the increase in home prices up almost 15%. West was over 8%, the Northeast 8%, the Midwest 7%. And the reason we saw such a big run up in the South in home prices is because the exit from coastal cities and states like California to states like Texas and Florida. So therefore, we saw the biggest price run ups in the South.
So there we have it. I hope everybody liked this housing market update. Please let me know down in the comments what you're seeing in your neck of the woods. Are you seeing homes staying on the market for longer? That's what's happening in a lot of the larger cities, including here in San Diego where I'm at. More for sale signs piling up on the corners, and less of those little things they put at the top when the home is sold or pending. So things are turning. Let's hope things continue on this path, and let's get a market correction, and let's have some buying opportunities for those that have been looking to get into their first home, and like myself, for those that have been looking to move up to a bigger home without being saddled with an enormous mortgage that's going to have you house poor and have you in debt for life. Thanks everybody for watching this report. Peace, keep stacking. Bye for now, everybody.